First of all, introductions. My name's Carr. I'm a director with Marsden Jacob, and I'm joined today by Stuart Maclachlan, one of the leaders of our water markets team. To open, I'd like to do an acknowledgement of country. Stuart and I are both joining you from Camaragal country in New South Wales, but I'd like to acknowledge the traditional owners. This meeting includes representatives actually and people who are participating from all across the country. So it's important to all of us that we reflect, acknowledge and pay respects to traditional owners and their nations of the entire River Murray system. I'd like to recognise and acknowledge the traditional owners and the nations of the River Murray, and that they have a deep and ongoing cultural, social, economical, spiritual and economic connection to the lands and waters. This connects both across the Murray, the Darling, right across the whole Murray-Darling Basin. On behalf of all of us joining in the webinar today, thank you for joining us. I'd like to pay my respects to the elders past, present and emerging, and acknowledge all Aboriginal and Torres Strait Islanders who are joining us here today. With that as an opening, I'd like to welcome everyone to the second in Marsden Jacob and Associates Talks Live series. In this one, we're going to be talking about simplifying water markets. Next slide, please, Stuart. So in the webinar series that we're bringing to you, we're looking to bring together and discuss a whole range of issues, environmental, energy, water, waste, recycling, agriculture, earth resources, etc. Basically, we're looking to offer a range of free webinars so that we can share our insights, our knowledge, and bring some of the research and thinking to a broad and open audience. We really encourage an open, positive and collaborative discussion during our webinars. So if you've got a question, you can raise your hand or you can pop a question into the chat feature in the webinar. We've already had some questions leading up to the webinar, which we'll talk about as we work our way through as well. But we really encourage you to contribute to this. There's lots of people in this webinar who have really deep expertise and experience. And so we welcome everyone to bring that to the fore. What will happen is that we're taking a recording of this webinar. We won't take a recording of the Q&A session at the end, and we'll make the recording available in the next couple of days. Next slide, please, Stuart. So as I've already introduced, there's two of us who are talking today, Stuart and myself. If you want to get in touch, you have our contact details there. In today's webinar, we're going to talk across 5 broad topics. We're going to be talking about some of the key terminology because there's a lot of terminology where water trading is concerned, and many of you will be across this, but some of you may be new to it. So we're going to do a bit of 101 on the terminology. We're going to talk a bit about water market trading. We're going to talk about risk and how water markets are actually helping participants in the market to manage for risk and some of the things that can be used where that's concerned. We're going to talk a little bit about what's been happening in the market in the weeks and months and the past year that's gone by, but also we're going to talk a bit about what's the outlook. So what's the outlook for next water year, which is really important because we're now at the end of April. The water year draws to a close at the end of June and reopens at the start of July. So a lot of people are starting to think about what's happening next year. But let's talk a little bit about terminology. Thanks, Stuart. So there are 3 broad components to a water licence in general. One of those, and the key aspect of this really, is the water access entitlement. This is in essence the ongoing right to access a share of water from a specified resource. On that entitlement, you can then get an allocation. An allocation is actually the wet stuff. It's the amount of water that's been made available by the relevant jurisdiction against that entitlement type. And that's for a given season. Lastly, the entitlements have names, and that name links to a reliability. That reliability is around the frequency with which the water allocated under that entitlement is likely to be supplied in full or in part. So we're talking about regulated systems here, where you've got a storage that regulates the water. Water is held in the form of an access entitlement, and then there are allocations against those access entitlements. Next slide, please. Where it gets complicated is that there's a lot of terminology here. I'm not going to go through this in detail, but what you can see if you look across the 4 key jurisdictions in the Murray-Darling Basin is that different names are used for essentially the same thing. For instance, a water access entitlement or water entitlement can be called a water access entitlement in South Australia, a water share in Victoria, water access licence in New South Wales, or a water allocation or a water licence in Queensland. So if you're trying to come to grips with these sort of things, be careful, because there's a lot of terminology out there and you can get tripped up on it. For instance, I've seen people get tripped up on the difference between an allocation in Queensland, which in essence is the entitlement, versus an allocation in South Australia, which is in essence the announced allocation or the declared allocation they might have available. So there's a lot of terminology. Some of the key things that are summarised there. If you're within a scheme, an irrigation network or an irrigation infrastructure operator, then there is some new terminology that also comes in as well. There's irrigation rights, person's right against an irrigation infrastructure operator to receive water. May not be a water access entitlement. That depends on whether it's being transformed or not. And transformation is the process by which you actually transform an entitlement from within a scheme out to becoming an irrigation right. And then there are delivery rights as well, because not only do you hold the water and have access to the water to get deliveries from the storage, but you need to have it delivered through the scheme. So you may have some form of delivery right or water delivery right, which is your right to have the water delivered by the infrastructure operator to your farm gate. So there's a range of different terminologies that are in play. Next slide, please, Stuart. Lastly, I'll talk a little bit about carryover, because this is important at the moment. A lot of people are talking to us about carryover. And this is basically the option to hold water in storage. It's a means of actually moving water between water years. And in essence, it relates to your unused seasonal allocations for use in one year, giving you access to it potentially in the next year, subject to the carryover rules that are in play where your entitlement is concerned. Obviously, where you're thinking about carryover, there are quite different rules depending on where you're located, and the graphic that you can see there, or the table you can see to the right there, shows that in some schemes you can carry over 100% of different license types, and some schemes you can carry over nothing, either because the entitlement type isn't relevant to it or because it's not permitted. And in other areas, you might have 20%, 50% that you can carry over as well. So you really need to appraise yourself of your local circumstances when you're thinking about carryover as an option. Another thing to think about where carryover is concerned, though, is that the higher reliability entitlement types, such as New South Wales high security, has a very high likelihood of getting a full allocation or very high allocation at the start of the year. So commonly, when you're carrying over water, you carry it over against a lower reliability product, so that you don't run the risk of losing access to some of that carryover because it's lost in the announced allocation process. So people tend to, or irrigators and other users tend to carry over against low reliability or general security type products rather than a high security type product. Next slide, please. Now, if you've got any questions or you want to do a bit of research, many of you will know that we stood up a platform called Waterflow a couple of years ago. As part of Waterflow, we've got a section of it where we've got a knowledge base, basically, and we've put together a glossary of a lot of the key terminologies, but we've also put together a whole lot of information on water trade rules, limits, different product types, etc. So if you're trying to grapple with a term and trying to understand what it means, I'd encourage you to jump into Waterflow and have a look in the glossary area or the Water Markets 101 section of Waterflow, and hopefully you'll be able to find an answer there. If you don't find it there, send us a message. We're happy to help, and that'll give us something to further load up in Waterflow. We're continuously adding to the content of Waterflow to ensure that it's relevant and current for all. Stuart, I'll hand over to you at this stage.
Thank you, Rod. So welcome everyone. My name's Stuart Maclachlan. I'm going to just touch on the next few sections and then I'll hand back to Rod. So water trading. So it's interesting to look at who actually does trade water, and it's quite a broad spectrum, and something we considered when developing our Waterflow platform was just who out there is actually using it. And as you can see here, it can range from small family farms to large corporates. We've got brokers or water intermediaries, investors, environmental water holders, and also government bodies. So interesting, everyone has their own use, and that gives the diversity in the water market, particularly in the southern connected liquid markets there. So there's two main water market products, and as Rod touched on, these relate to the allocation and the entitlement. So we've got the permanent entitlement, and you can trade that permanent entitlement. So you can either trade all of it or part of that water entitlement, and that's transferred from one buyer, from a seller to a buyer. The trade of, it says here, the trade of an annual entitlement to access allocation within a water system in perpetuity. And the analogies used is often applied to a property sale. What you're buying is a little, in particular in regulated systems, you're buying a little air pocket, a space in the dam. You've got a little bit of property in there. And then we've got temporary water trade. And so the trade of a specific volume of water from one entity to another, which must be used within a water year. In some instances, it can also be set aside for carryover purpose. And this is sort of like a property lease. You can go out and buy some allocation from a willing seller, use it for that year, and then next year it's gone. And we've got some secondary water market products. I know this isn't exhaustive. There are some other products smaller out there, but these are the really key ones that we're seeing. And these secondary products, we've got an entitlement lease, and this has become more and more popular as we go on, and permanent entitlement growers who require that ongoing supply. So we've got an entitlement lease. Entitlement holder transfers a complete access of the entitlement to a secondary party for a specific period of time. So this could be 3, 4, 5 years, up to 6 years. As Rod indicated, we're always updating our water flow platform. We've actually just put entitlement leases on there, as well as carryover parking. So we've got some information there to help make the market more visible and what's happening out there. And at the end of that period, the access to that entitlement returns to the leaser. We've got forward allocation trade. So allocation water is traded with a future delivery date at an agreed price. The date of delivery may be in the current water year, or it could be over multiple water years. And then we've got carryover parking. And so this is where you might have space on your entitlement, and someone can come and rent that space from you and keep water on there. And then that water is returned at the beginning of the next water year. There's a lot of information here. We're going to run through these. These slides will be available at the end, so don't worry about taking notes and whatnot. You'll be able to see this information in more detail at the end. So next part, we're going to talk about risks and some of the risks from market participants out there. This isn't exhaustive. There's obviously a huge plethora of risks for all those different market participants. We're focusing on water users here. And so we've got, what are we managing for? We're managing for water availability. Rainfall and allocation yield, it's not sufficient for our watering requirements, or they're potentially, in the year we're currently seeing, we're getting excess water due to quite high allocations, high unregulated flows. So there's some natural flow coming on top of the land, and we're not needing to use our water. So that's more of an issue now, but that's not to say we're not going to revert back to a drought in a few years. We've also got temperature, high temperatures increasing the water requirement, and then we've got price. So linked to water availability, low water availability, we typically see higher prices. But what are some of the things we need to think about when managing our risk? And when we're thinking about the water products that are out there, we need to sort of consider what are the fundamental aspects of the water market that might impact on how I can get access to that water that I'm potentially going to trade. And what we've got here is a little diagram that's sort of sits in the background of our water flow, and this is how our water flow platform works. And when trading, you've really got to be thinking about these different trade limits and some of the rules. And so key trade limits for the Southern Connected, we've got the Barmer Choke. It's a volumetric limit. We've got the Murrumbidgee IVT, Intervalley Trade Limit. We've got the Goulburn to Murray Trade Limit. and we've got the New South Wales to Victoria trade limit. There's also some in the Northern Basin. However, these catchments are less connected hydrologically, and this means that trade limits typically apply intra-catchments within zones such as the Maclachlan for the upper and the lower. So we've got the primary water market products, and they can certainly and historically have been the ones that have helped manage those types of risks: water availability, price. We've always temporary water, always available on the market, but the price risk may be significant in years of low resource availability. We saw, so a couple of years ago, Southern connected up to $1,000 a megalitre for some allocation water. We've then got permanent entitlements. Prices have been sitting at historical highs across much of the Southern connected. We've also seen high prices sold in Queensland, recent sales of water up in, I think by SEC waters, 6,000 or 7,000, I think, Rod. But the issue is you need the capital to buy, and there's still an allocation risk in the dry year. You might have that entitlement, but you might not get the allocation onto that entitlement. So what can secondary products do? So we spoke about these, but what can they do for you in terms of managing the risk? Well, we've got forwards. So that's contracting a volume and a price for a later delivery. And this can give buyers certainty of the volume of water that they will have upon transport and the price that they can pay. So they can manage that and lock that in. It provides buyers with an efficient risk management tool against an allocation risk, and allows sellers to lock in their future returns. If you've got a little bit of excess water on, you can get rid of it. We've got carryover parking, affordable product, clear and tangible benefits, and this allows for the protection of the place's carryover water, generates returns on the holder's unused carryover space, and typically the spill risk in cases that depends on the contract type. So who bears that spill risk should, when you carry it over, so in the Goulburn, the carryover only becomes available once the low risk of spill is declared. If that water potentially in the spillable account spills, then who bears that risk? Then we've got leases. And this offers a long-term solution for both parties. Typically, historically, leases have been traded by large entities, water investors use them as a product to achieve returns. But we're seeing smaller farms, smaller holders utilize these leases because they can give you that long-term return, and they're becoming more and more popular. But there are some risks with these secondary products. And so what we're showing here is that forward water, as we said, it's a price premium compared to the current temporary water price. So for example, we've got Zone 7, this was a couple of days ago, spot price $63 a meg, but we've got forwards on there now, $160 a meg, and that's for delivery in October. So you just need to consider, I could buy $63 a meg now, carry it over, I had space, and then I'd have it for next year, or I could lock in 160 if I thought we might have a drier season, or the price might fluctuate. Similarly, we've got entitlement leases, and leases are up from 3 years, 6 years. And what needs to be considered is what's the average temporary water price going to be over that time? So, you've got that entitlement, and you might have it Murrumbidgee high security, you might be getting 95% allocation over that 5 years. And so we just need to consider, Vic Murray 7, high reliability, the lease price $285 megalitre, $285 per megalitre. And what's over the last 4 years, we've seen that the VWAP for the spot price for the allocation market has been about $280. So you can see you just need to do a bit of thinking about, well, what would I actually be paying on average over the 4 years, or is it worthwhile going and picking up an entitlement lease? And then we've got carryover parking. Product it's typically cheap, but if you don't have excess water, you need to buy it from the temporary market this year, and you lose 5% on evaporation if you carry over water in Victoria. And you could see there recently, low reliability Vic 7, which is a good watermark product for carrying over. It's $90 a megalitre. But as we know, all good things come to an end, and it's better to be prepared and understanding what can I do now to help manage those risks that I might see in years with lower water availability. And we've got water availability forecasts. All the states put out allocation determinations. They put out forecast statements at the beginning of each year, not water yet, but January. We can look at the BOM, do some great webinars. We've got the two ENSO and IOD, Indian Ocean Dipole, and the Southern Oscillation Index. We can look at see whether we're getting an El Nino or a La Nina, and both of those typically influence the average levels of rainfall across south eastern Australia. With this year, we've just had a strong La Nina. Water market, what's happening in the water market? What are the secondary products I could use? If I'm thinking about, if it's going to be going into dry, could I lock in a lease? Could I forward purchase some water? We've got different crop types. You might be in a different cycle. You might be an annual cropper. You might be thinking about putting in a fair bit of rice being put in the dry years. What might I be putting in depending on the cost of the inputs? We're seeing pretty high prices with fertilizer this year. Petrol, diesel prices are going up, and I might not have the equity from my good returns from this year. Might be being soaked up by some of those increases in commodity and input prices. And then we've got government policy. What is happening in that space? We know that the interim Goulburn to Murray IVT that's in operation to June 2020. And then the Murrumbidgee IVT is also being reviewed at present. So those changes may have impact on the ability to trade water, which we've seen potentially with the Goulburn, the changes to the trade rule and the constraints there. This is just a graph we made for a project we're currently doing, and this just shows the green is Lake Eildon storage. And so this is back to 2007, 1st of July. And then the bars, the blue is the Southern Oscillation. So when we get up to the top, so that's when we get a La Nina. 2 is when we sort of get an alert, and then we get a watch, and then in the middle 0, it's inactive, and that's when we're neither at a La Nina or an El Nino. El Nino here is in red. So we can see came out of the Millennium Drought early on, strong La Nina in 2010. At that period was also a negative Indian Ocean dipole. It's not on this, and it's probably something I should put on there because those two combined together really give you a strong influence, and that's what happened there in 2010. We had quite a strong influence. We also had 2015. We had a El Nino. We can see there. It was also a strong positive Indian Ocean dipole, which those two combined led to quite a decline in water availability. And then most recently we've seen 2 La Ninas, and as I touch on later on, the indication is here that the outlook for 2022. We're seeing there the Nino 3.4, so they're the different regions out in the Pacific Ocean there. It's trending, all those different, the grey lines are all the different international models and the Australian models. On average, it's trending to inactive, which is something to consider. We look here, we can see in 2012-13, it was inactive, but we still saw there was something else there that was impacting it. We can see the Indian Ocean dipole is predicted. It's a very high variance in those models that's spread all the way from 0.4 to 2. So during winter, they do get low predictive ability. So that's why those models is quite spread across. But it is potentially indicating a negative, which leads to above average rainfall. And we can see there the chance of exceeding median rainfall June to August. The beginning of the water year is there's quite a bit of blue there, dark blue. So we could be seeing additional more rainfall and more potholes, I think, in the road base. So what's been happening in the market? I'm going to pass back to Rod now.
Thanks, Stuart. I guess, what's interesting out of that, Stuart, is that we've got a situation where we've had a very wet year, and the signs seem to be signalling that there's a good chance that there's going to be more rain around next year. Whether it'll be as wet as the year that we've just had, yet to be seen. But the signs are positive that there'll still be some water around, which basically presents an opportunity for people who are thinking about their risk into the future to use this time now, I would suggest.
And mitigating losing water is, I think, key now is mitigating losing spill if you're in a position where you've got that happening.
Yep. If you've got potentially carryover, mitigate your risk of losing it in a spill event. So what's been happening this year? Well, look, kind of not surprising. If you look at, this is allocation market, so the temporary market, as Stuart was telling us about. Over the course of this year, we could see a pretty clear trend in the southern connected areas that prices have actually sort of backed away compared to where they started the year. So this chart goes from May to 21 to April 22. Highest prices were observed effectively in the first quarter of the year, July through September, and have declined since then. But with some separation in aspects of the market as well. And even if you look at the prices today, there's been some significant shift further south in some of these markets as at today as well. We look at the northern, story's a little different. They've also had pretty high water availability, and in some of the markets you can see some decline, but these are generally much thinner markets. The volume that's being traded is not as significant. So prices tend to bounce around a bit more, but equally, I guess what we can see is there that many of the catchments have been somewhat stable in essence over the course of the water year. Some of them look like they've had some upward spikes, but there's been some significant gaps between some of the trade points in that data I'd observe as well, Stuart. So it's just a bit more volatile in some of those areas, but it hasn't seen that same general downward trend in the northern market. Did you want to comment on that as well, Stuart?
No, just this one before. I spoke about the trade limits. I'll just go back here. You can see that, at the beginning of the year, there is that separation of prices. We can see there's a clear trend where there's a band down the bottom and a band at the top. And if we look at the different ones there, we've got, essentially those that have got trade limits, Murrumbidgee, Goulburn, and above the choke versus those that are below the choke. And that's clear indication with the Goulburn sort of creeping back, feeling a bit left out. So it's creeping back up now.
Perfect. I guess then, in terms of permanent markets, what's been interesting this year, but kind of not surprising, this is what's been observed in sort of previous La Nina years, is, I guess, if we look at this, since 2015, across the permanent entitlement markets in the Southern Basin, we've seen quite a strong growth in the value of the higher security and reliability entitlement types up until about 2022. There's also been quite substantial growth in the general security entitlement and also the low reliability entitlement types over that period. It doesn't look quite as strong there, but it's coming from a lower base, so that the improvements have been nonetheless significant. Since 2020 through to 2022, though, we've seen a bit more of a stabilising of the high security and high reliability prices. And this is not surprising given that there's a lot more water around now and allocation has essentially become a lot cheaper. But we've actually seen some sizable growth, particularly in the low reliability product type over this period. And you can see that in sort of the purple line near the bottom there. With this product becoming really quite popular as a place to park water between years, seems to be driving a lot of the value going into that. And then general security has also seen a bit of an uptick in recent times, and it's getting good allocation, and it's got a good prospect of allocation, at least over the coming year or two, you would suspect, and we'll talk a little bit about that in the next few slides. But generally they've really remained quite firm, these markets. We haven't seen a real fall away in the prices over this wetter period. In the north, as you can see, markets are much more volatile and thin in terms of the volumes that are being traded. So, there's not the same sort of defined pattern, but we can particularly see for the high security products that there has been something of a jump in price over the period between 2015 and 2022, and then that stabilised a bit between 2020 and 2022, the last couple of years. We can also see some growth in the prices on the general security entitlement types as well, with them yielding better allocations as a result of better water availability. This is fairly, somewhat anticipated that we would have seen some of this occur in the Northern Basin as well. So I guess prices of permanent entitlement are basically firmed up in those areas as well. And lastly, I guess, something to think about, where are the trade limits currently at? Well, farmer choke looks like it's open. This is the ability to trade from above to below, but it's 0.11. So there's not a lot of headroom there, which means that in essence, it's effectively closed, because if you wanted to move any sizable amount of water across the choke, you wouldn't be able to. The New South Wales to Vic trade limit currently closed. This gets updated when spill risk gets updated, where this value is concerned. Murrumbidgee IVT closed to out trade. So intervalley trade, interstate trade from Murrumbidgee regulated closes on the 30th of April, something to be aware of. But at this stage, where we're talking allocation, the ability to trade out is currently closed, and the ability to move it out across that is closed. And the Golden to Murray IVT is also currently closed. So to the point of the importance of IVTs and trade limits, it's really important to be across these and monitoring these, because they can change really quite quickly and can open and close relatively quickly. So what's the outlook? Stuart, I think I hand back to you at this one.
Thank you. So we're just going to run through a couple of the outlooks here, some screenshots from our water flow, and as we touched on before, there is indications of quite high. So we're looking at here at Goulburn 1A, we've got 1st of June, for a wet 100 down to extreme dry, at least 50. I don't know the exact figures. It looks about 45, 50. Vic 7 below the choke. We're looking there, even wet and average 100%, but at least 85 in an extreme dry, which is very good. And we're here, general security, New South Wales, 1st September, 40, 43, I think that is, for wet, and then 1st of November 2022, we're looking at up to 100 for both wet and average. Murrumbidgee, similar, starting around the 40 for both wet and average, and then drops down to just above 20 for extreme dry, and then that's looking like it'll get up 1st of November above 40, but depending on how much inflows, these will get updated monthly. So depending on the inflows, with that that negative IOD comes through and we get some sufficient inflows, we may see higher availability there. I know South Australia is not on there, but they're expecting for 2023, they're expecting 100% opening beginning of the water year for South Australia 3. And summary remarks, as we've alluded a few times, another year of potentially high, we can't be sure. Another year of high water availability is likely, with high announced, relatively high announced allocations expected. And what does this mean? Well, we agree with, ABARES has been doing some great water market talks, and allocation price will probably remain relatively low over 2022-23. However, there is going to be some those continued regional differences between the IVTs. Interestingly, forward water is currently being sold for consuming more than the price outlook, and we're getting some entitlement prices. Some of the information out there, some of the good water market updates that come through from some of the intermediaries, indicating that there's strong interest and where location supply is constrained. And I think we had a question there from Anthony McCluskey. Wouldn't you say that the Murrumbidgee IVT was negative? Yes, we probably should update that. We'll update that in the slides.
Yeah, good call, Macca. The current balance, I think, is what, 124
Yeah, that was just the trade.
Negative 24. So yeah, there's plenty of headroom if you want to bring water from outside the Murrumbidgee in. But if you're trying to take it out, yes, it's currently sitting at negative 24. So it is closed quite substantially at this point in time.
And as we mentioned before, we've up. That's just a little screenshot of our new forward water and lease in our market overview section. So if you're wanting to just keep up to date prices, those prices there, you can see the last 5 trades from some of the broker feeds that we get into our water website. So you can see updated within 10 to 30 minutes. So you can get a good sound sense of what's happening in the market there.
So the interesting thing out of that one then, Stuart, though, if you go back, is that, you know, it's in most markets, it's commonplace to look at forwards as an indicator as to what prices might look like next year. I know the ABARES work, which is, you know, fantastic to have that as a data set coming in, suggests prices would be sort of below the $100 per megalitre mark across much of this zone. I guess what seems to be happening at the moment, though, is that there's still a bit of uncertainty next year in the market. And so that's going to be presumably driving the fact that we can see the prices sitting at about, you know, the $125, $150 per megalitre mark if you're in the market for forward water next year.
And I think, Anthony, you said to follow any indication from e-water holders regarding activity or moving water. What we saw recently, I think View sold some water in the Goulburn, but we saw there was an indication from the Chew, I think, to sell some water in the Goulburn, but they haven't progressed that. There's obviously quite high availability of water in across the Southern Connected, and unregulated flows will be providing a fair bit of natural flow and satisfying some of those environmental outcomes. So potentially there might be some space there for some trading in the future to help manage their risks as they have similar water risks of having too much water in their accounts. So yeah.
And equally, yeah, I think it's early days in terms of their decision making on where their water is going to be used over this winter period and into the spring period of 2022. And, you know, as you note, there's the potential that they could move water around the system, and that can have impacts on where the IVT balances are at. No early indications that I'm aware of at this stage that are sort of firm in this space. Because the good thing for the environment is that many of the environmental assets have had a pretty good lick of water in recent times across the northern areas of the basin and the southern areas of the basin. We've seen a lot of the wetlands, particularly in the north, that have been starved of water for quite some time, getting some pretty sizable amounts of water coming in and being supported by some of the work of the e-water holders as well. So, yeah, I think, you know, bodes well for the next couple of years from the environment's perspective, which, as you say, Stuart, may mean that there's more of an inclination to potentially consider the opportunity to sell water rather than use it if there's sort of surplus to their requirements at this stage. A really quick plug to our next Talks Live, and then we'll open up if there's any further questions. So Alex Marsden, who's one of our associate directors, is going to be talking about environmental economics and how you use it when you're assessing the benefits of ratifying an international convention. He's in particular been involved in the regulation impact statement work on the Minamata Convention. So if you've got an interest in environmental economics and how you can draw on those benefits to support consideration around ratification of international conventions, come along to the Talks Live on the 21st of June at 1 p.m. Eastern Standard Time.